happened was I used to just teach the psychology component of it while I was running a fund. David taught technical stuff, and I just, because my passion was what's the mindset to enable you to do all this. I just stuck with telling David when I was talking about it, and he says, "Kid," and I created something that I was using to work on myself to improve my own mindset to run my own fund. And David then asked me once, "Could you sell that to my customers?" And I said, "No way." And he said, "Go on." And so I did. And then there was this product called Ultimate Trading Psychology. So I said, "Oh well, they don't understand how it works." So then I created like these 5 audio tracks so people could understand how it worked and why it would work. And so that was the genesis of that. And then, but I was just busy doing the fund for like 5 years. And then the HFTs came in and dominated it. I thought I said 7 p.m. Why would you? What you said? I thought you said 7 p.m. No. What do you mean I said 7 p.m.? Why are you thinking that, Bruce? The link's always been the link. I haven't changed any link. Why do you think I said 7 p.m.? Where have you got that one from? I never said anything to you about it. I just sent it out. Right. So that's so then when I did that, David was like really grateful because I kept saying, "Your customers might." The secret is this, right? Trading is difficult to work out, simple once you know what you have to do, right? That is the honest truth. Trading is difficult to work out and simple once you know what you have to do. But once you know what you have to do and doing it are 2 completely different things, right? Does that make sense? Once you know what you have to do and getting yourself to do those things consistently is a completely different game. So what I like to do is tell people, here's how you really... So now, since like unfortunately David passed away, I was like thinking, but I better tell people how you really do it and how you put all these pieces together. And then who you need to be to do these actions. Because I could tell you how to trade the financial markets and create phenomenal results as like, who's in here? There's someone in here. It's not all me. Like there's somebody in here who's like a CTA and he's like killing it. Like he's can I say how much you're up this year? For your customers, your clients. What's the number? Type it. He's up for his... So you understand, what's the average right now, do you reckon, in the industry for clients, people managing their money? What do you reckon it is? God knows. Probably negative, right? So, Anthony McCarthy, go to my website, right, and then go and check out this interview with this guy. It's brilliant. Right? One of the apprentices said, "I listened to that." He said, "I listened to that interview once." He said, "I think I listened to that once a month." Right? He said, "About once a month I listen to that. Once a month I happily listen to that." So look at this, taking stock. Go and listen to this. So most people are probably down right now, where Anthony's clients are up 45% for the year so far. Okay. So that was the last session in case you missed it. Where's that one with Anthony? That one. Anthony McCarthy of Alpha Kiros Asset Management. Go check out that. That's a brilliant interview. Some great information in there. Okay. So, want you want to know, where would you say, Anthony, the mindset is in terms of your values, in terms of doing what you do? Is it the trading first? That's a different one. Is it? No, that's it, Alex. That's it. There's only one I published with him. That's it. I promise you. That's the one. Right? So let's have a look at this game. Right, I'm going to record something. I would say that there's no difference between mindset and trading. Brilliant. Okay. Let's have a look. I'm gonna just do a quick thing for a free video, then we'll just continue. Hi and welcome to the free video with me, Patrick Stockhausen, where we're looking at the markets when people are scared because they think coronavirus is going to kill them. And do you know more people apparently? And I'm not a doctor. Okay, I'm not a doctor. I don't give medical advice, but I read that more people die from the common cold and flu than the coronavirus. And most of the people that are dying from coronavirus are pretty old and they've already got something systemically wrong with them to begin with. How and why and if it's true, if that is the reason why the stock market is acting how it is acting, I have absolutely no idea. But you know what? Here's the honest truth. I don't care because I don't trade based on some fundamental reason. Could the fundamental reason alerted you to some opportunities? Yes. But could, I say unto you, could the chart have alerted you to the same information, the same opportunity? Yes. Alright? Do I like to trade as if I'm on a desert island? And I've got nothing there. Funny enough, I've got some electricity and I've got a laptop on screen and it never rains on my screens, stuff like that. And I'm able to do my trading. And I don't have any friends talking to me. And I don't have the media. I don't have all the channels saying all this rubbish to me, influencing my behavior. Right? So right now, where is money going? Where is money flowing? Money is 100% definitely going into gold, right? Do you see that? Money is definitely going into gold. That is a safe haven. But is that a safe haven for institutions? No. Now on this software, I can only show you so many things. Let's have a look. I can't show you the futures for all of this. So I'm just going to show you long-term bonds, BLV. Is money flowing into bonds? Yes. Money is flowing into bonds. Can you see that? Money is flowing in there. So money is coming out of one asset class, going into what people deem to be an asset. This is the biggest market in the world, the bond market. I'm sure somebody would probably tell me, no, it's not. It's the crypto market, right? No, it's not. Right? The bond market is the biggest market in the world. Okay, and that is where money is being treated best. Okay, so here, gold, right? There's not enough gold in the world for institutions to be pouring their money into that, and they would probably that thing there, that ticker symbol is not big enough. But that is where money is going, and BLV is just representative of the asset class of bonds. That's the longer term version of it, and that is where it was going. Now, I don't think this has been updated yet, okay? But it seems as if everything else, like, I don't know if you know the story, in England we have something called chicken licking, the sky is falling down, but oil dropped. Now, you can't really see it on this monthly chart, so I'm going to show you on a daily chart over here. Oil dropped, look at this, 25% in one day. Boy, do I wish I was short that opportunity. Okay. Boy, do I wish I wasn't, but I wish I was. Okay. I wish I was, but I wasn't. I was too busy putting money in gold and in bonds and shorting some other things, right? But mostly, right, in those two asset classes. There's people in here. Anthony, who's in here, was shorting the indexes from a long time ago. I don't know how he knew to do that. We discussed it, but he did. But that's brilliant of him. So if you say to me, where right now is the best place to put my money? I'm going to say to you, I have no idea. I don't know what your risk tolerance is. I don't know what you're like. I don't know what you're like with taking losses. I don't know what you're like with taking gains. You might be the kind of person that says, I'm quite happy to take a gain. But I meet lots of people that are happy to take a gain. But as I said last time, here's what they're doing. They're eating like a bird and they're defecating like an elephant. So they take a tiny little gain and they take these huge losses. This game is won by you creating asymmetrical risk-reward ratios. What do I mean by that? You risk 1 to make 3. You risk 1 to make 4. You risk 1 to make 5. Does that make sense? And above. If you're playing the game of risking 1 to make a half, and then your whole portfolio gets caught out in this market, okay, in this market, you are not a happy bunny. So, with that said, what is the thing I'm going to leave you with on this free video to tell you that I think could possibly help you? I'm going to say this, that smart money is there. All right, smart money is in the bonds, and one of the wisest things you could learn to do is to learn to hedge. If you've got a selection of stocks, learn to hedge your portfolio. Learn to hedge. Learn to beta weight. Right? You can go online. You can find a lot of free videos and learn how to beta weight so that when the market is showing you that it is likely to be coming down, that you beta weight your portfolio. But here's a hint. You better go back and test when you do that. Otherwise, it's going to cost you a lot of money. You go back and you test. And don't go back and say, well, I saw in 2010 the market came down, and if I beta weighted it when this happened, I would have been able to achieve the X. Do not have that bias where one occurrence is determining what you're going to do in the future, right? You go back and you find a minimum of 30 triggers. A minimum of 30 triggers. And you said, if the market did this, statistically over 30 times, I made more and I was better off when this happened than not doing this. So till the next time, this is me, Patrick Stockhausen, saying love you, leave you, see ya, bye. Okay, that's the free video done, everybody. Let's go through the markets and see what's going on. Right, I'm going to be looking at, right, even though I asked you all to fill in that survey, scared me, that did. I just want you to know, that scared me, that information. Which time frame are you trading? 4-hour charts. Are you consistently profitable? No. Which time frame are you trading? An hourly chart. Are you consistently profitable? No. Which time frame are you trading? A daily chart. Are you consistently profitable? No. Which time frame are you trading? Weekly. Are you consistently profitable? Yes. Do you hear that? That's all I'm going to say. Okay? How many of you are trading for income in here? Just type it in. How many of you in here are trading for income? You're trying to trade for income. And how many of you are trading for wealth? And how many are trading to get rid of your debts? Okay? I'm going to tell you something right now. Trading never has been, never was, and never will be designed to replace your income. I'm going to say that to you again. Trading never has, never was, and never will be designed to replace your income. You are being told that by somebody who is not doing that. If somebody is telling you to do that, here's how you replace your income from trading. Let me reassure you, they are not replacing their income from trading. They are replacing their income with you paying to learn how to trade. It's not been designed to do that. Every single professional trader in the world is paid a salary, or they have some sort of income from external sources. Trading is a wealth building game. And if you have in your mind, I need to trade, hence this is called the Principles of Financial Success with the markets this week, right? If you have in your mind, I must create some income to pay my bills, okay? Let me tell you this right now. Your brain is going to start seeing trades that don't exist. You're going to start doing all the things that you're not supposed to do. You're going to start getting in early, getting in late, not taking your stops, not taking your profits. I need more money than that to pay the bills. You're going to see what isn't there. Does that make sense, everybody? If that makes sense, type yes. Okay? Somebody is telling you a lie. Right? Every successful trader, Okay, when I was managing money, guess what we did? You charged a percentage to manage the money. And then, at the end of the year, you get a percentage. You get a percentage of the profits. So you have a management fee. That management fee is your guaranteed income. And then you get a percentage of the profits. Am I guaranteed to get a percentage of the profits at the end of the year? Yes or no? No. Because if I don't make money, I'm not. It is in my interest to make money. But do you understand? That is how trading really works. Right? So if you are trying to think you're going to replace I'm going to try and trade to replace my income, I promise you it's not designed to do that. Somebody is messing you around. And then I'm going to have to undo that in your mind over time to get that out. Because here's the thing. It is hard to not think about something. 2 and 20. Correct. 2 and 20. Okay? I'm no longer doing that. I'm no longer playing that game. I get more fulfillment out of building wealth while telling you how to build wealth. What does that mean? Man, when I'm telling you about opportunities, let me reassure you right now, I'm putting on those opportunities. Something triggers in my mind when I see an opportunity and I tell you how to what it is, particularly when people are inside our program like Sunday Insiders, which is not for sale. I want you to understand there's nothing for sale at these seminars, at these things, right? It's not for sale. It's off the market. It's not for sale. And besides, there's a path that I need you to go. There is a path. I'm going to tell you what it is, right? Do you want me to, have I told you what the path is? Let me tell you what the path is. Right? You need this. There's something called the 5 financial legacy powers. How do you align your life for financial success? Okay? Because if your life isn't aligned for financial success, if your life is not aligned to set you and your family up with wealth, right, then it ain't happening. Then, there's something called the financial legacy builder's mindset. Then your mind needs to be aligned to do this, right? And then we have in here something that's financial legacy trading and investing. Right? So how do you actually trade and invest to set you and your family up with generational wealth and income in 100 trades? What? Say what? In 100 trades. And then there's people in our inner circle apprenticeship program, But don't even worry about that bit yet, right? You're on a journey, you're on a path. Guess where you are? 99% of you are here. You're just listening to free stuff. This thing is coming out. This is peanuts. This costs a little bit more. This costs a little bit more. This costs a hell of a lot more. Right? Does that make sense? But guess what? Guess what I'm going to sell you today? Free stuff! Information! Does that make sense? Right. So here's the deal. Gold on a monthly chart is definitely going up in a stage 2. Right? Gold. We can see that silver is not correlated to the move in gold. So if you're thinking, all right, I missed it in gold, I'm going to get it in silver, those two things do not look the same. They may have dropped at the same time, but they are not looking the same. One is going up, okay? With the NASDAQ. Now, I spoke about this last time. I'm going to ask you, if you look at this chart here on a daily time frame, okay, looking at that, that's all I want you to look at. Is that trend over? Yes or no? Looking at that, is that trend over? Hell yeah, of course it is, right? 100%, that's definitely over. That is a definitely over, right? That's a stage 2, stage 3, stage 4, stage 1, stage 2, stage 3, stage 4, sideways consolidation, stealth money buying it, stage 2 all the way up, stage 3, stage 4, right? Okay, now 7,500 ish. What is? Oh, right, is that what it's dropped to? This is probably later, isn't it, right? Is that what you're telling me? Next test is 7,500-ish. Oh, Very good. You were definitely a David Elliott student, weren't you? Right? Absolutely. Now, but if you look at this, I'm going to ask, is the trend over? Maybe. But if you look at the bigger picture, is this trend really over? Is that trend over when you look at the monthly chart? Because let me tell you this right now, this was where the big money was, and this is what people were looking at on a most people are looking at a day-to-day basis. Okay? So here, right. If you weren't looking at this, okay, you missed getting in this. The media, most people are looking at, and the media were constantly looking at the daily chart, and all the way up to about 2014, most people did not get in this market. Most people got into the market in 2015. Who here, right? Please, okay, not you Sunday Insiders, and not anyone in the apprenticeship, okay? Who here has got a long-term position on in like the Nasdaq or the S&P or DIA? Anyone? Or you did have until the crash, or up until recently? Do you have that on? Or all your positions basically short-term stuff? Type yes or no. No. Right, so it's all your trading short-term. So you don't have any... So you don't have any way... None of you are actively trading in a way to capture this big massive stuff. Right, okay, you've been mostly in cash for 6 months. Why have you been in cash for 6 months? You probably because you're going to say I didn't like. So you have not. Okay, you haven't got no. So most of you haven't got a way to actually capture these big things. Wow. What about everybody else? You've not been trading a number of years since blowing your account a number of years ago. Right, so I've been focused on education. Okay, and what are you learning, and where are you learning, and who are you learning from? Because all those things matter. They say it's 10,000 hours to master anything, but guess what? It's 10,000 hours if you're doing the right thing. It's more than that if you're doing the wrong thing. So what are you learning? Who are you learning from? That's what really matters. It's 10,000 hours of doing the right thing, not 10,000 hours of doing the wrong thing. So if we look at this, we can see quite clearly that this technically is still in an uptrend, right? Trying different things, some good, some bad, some a rip-off. Okay, name some names you're learning from. Some good, some bad, right? Some that's funny, that, right? And I don't mean funny at you. I mean it's just funny what you wrote. This is technically still an uptrend. But what happened was when this was going up, most people were looking at a daily chart and they missed this entire move. But what you all are telling me is, apart from the people that are doing this stuff, what I'm saying, that are doing, none of you seem to be capturing this big, massive, easy money stuff, right? And if you're looking at the daily chart, what happens is, the market's crashing, the market's going up, 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 the market's crashing. That is going to mess with your psychology and your ability to treat it, because you'll look at it and you're anchoring. Do you know what anchoring is? Do you know what anchoring is? I'll tell you what anchoring is. Do you know Pavlov's dogs? Where Ivan Pavlov, the dogs would get hungry, he'd ring the bell when the foods were coming out, and then they'd give them the food. And every time the dogs, he'd show them the dog food, and he'd ring the bell, and the dogs would start salivating, and he'd give them the food, and he kept doing it, he kept doing it, he kept doing it. Sometimes the dogs would bite him, and eventually he just conditioned the dogs so much so that he could ring the bell, and the dogs would instantly go into that state of hunger. Give me the food, right? So what's happening is, you're looking at this market on a smaller time frame, and you are anchoring, oh my God, up, down, this chaotic state with the market. So then when you come to look at a chart, your feelings are being triggered from this, which is not the same feeling that you get when you look at that. Does that make sense, everybody? So if your thoughts control your feelings, and your feelings control your actions, and your actions control your results, and your results control your destiny, then guess what? If you're looking at a small time frame, you are never, ever, ever going to be able to capture that, and your psychology is taking you out the game before you've begun. So what are you conditioning yourself into? What are you conditioning to yourself so that when you look at these charts, you can't even do the same game that I'm talking about? Does that make sense? Because I could be saying one thing to you, but what you're feeling right now as I speak to you, right, is determining what you're actually seeing on this chart. Chaos conditioning versus rational conditioning, right? So that there, we spoke about this. The market is what's after? Do we have to go after we've got monthly? We've got a quarterly. We've got a yearly. Okay. Okay. Let me see this. Okay, where's the Dow? Where's the Dow 30? And we spoke last time about the market testing. Look, tested this, kept the trend. Test the 50, stays in the trend. Is this likely to test this point here? Yes. Yes. If this closes below this, well, this may well and truly be game over. Okay? If this starts closing below this and then tests it underneath, then this is definitely game over. Because if you look back historically, every time it's done that, close below it, test it underneath, gone. Went below it, test underneath, gone. All through the 80s. Okay? Goes underneath it. Oh my God, forget it. The game's over, right? Does that make sense? One time, a test, didn't do it. Test it. Okay? Drags it. Drags it. Doesn't do a proper test. Test underneath, forget it, the game's over. Test on the 1929 crash, goes underneath it, test it. Can you see that? It is more probable, right? Probable, if it does that, the game is over. But based on what some of you are saying that are not my things, right, in the upper echelons of the programs that we're doing, you're not capturing these massive shorts there, massive short there. Let me tell you this right now. Here was when I got married. Where is it? September, that month here. Well, short the market on my honeymoon, and we caught all the way down with a load of puts. Okay? And do you want to know guess how often I had to look at the market based on what I'm doing because of the time frame we're trading? Once per week. Okay? So, the market, is what I'm saying going to definitely happen? No. This is probable, not certainty. Probably is going to test this from above at least as an absolute minimum. Okay? And we don't know. We just deal with what is. So, gold is going up, as you just saw in the free video. Right? Silver is not in the game. The Nasdaq is going to come back and all right. So test all this 20 stuff has got to probably come back here and test this at an absolute minimum first. If this goes down to here, my goodness, that will be a drop and a half, because that will be a drop of 33%. Okay, how far did that drop before it broke the 50 last time? 57%. Okay, so 33%. Okay, in terms of a weekly chart, we need to draw a line, don't we, Mr. Stockhausen? That there is just, there you go, roughly around that 20, just near that, close to that 20 SMA. Okay, the test there and there. Okay, commodities are, wow. Okay, I need you to pull back at least and do something for me to short you. Okay, because this was going sideways consolidation. The SPY we've just seen. SPY we've just seen you. What is this? This is REITs. REITs are having a sell-off. REITs having a massive move also to the upside. Does this mean all the REITs are over? Short-term REITs are correlated to the stock market, right? The short-term REITs are correlated to the stock market. Long-term REITs are correlated to the property prices. So short-term, this is selling off. That does not mean house prices are selling off. But long-term, these things are correlated to the property prices. Bitcoin is like, you know, your schizophrenic cousin that you're not sure if you like or not. And oil, as we just saw, was going down. Right, so there's a safe haven and there's probabilities of what is likely to happen. Does that make sense, everybody? Right. So if you're looking for opportunities, they are either to the upside in the easy things that are going up, or then the downside of the things that are going down. What questions do you have that I can happily answer for you? Type them in, or I'll put you on the speaker on the microphone. Or if you've got some stock that you want me to look at, then tell me what you want. Tell me what you're thinking, and I'll type it in. Just type it in and I'll answer your question for you. Tesla. Are you long or short it? Oh, right, okay. I'm going to look at this. I'm going to look at all these things on a weekly chart. I'm going to look at them all on a weekly chart and a daily chart, okay? Apple stock. Tell me what you want to know about it, okay? Because otherwise I can't, you're just saying the stock, okay. Okay, this, because otherwise I'm going to just say entry point. What? Okay. The market is dropping. Why do you want to buy this? Bruce is being cheeky. Okay, you want to know if right, okay, so listen, here's the deal, right? This is going up and dropping. I'm going to ask you this. Do you have a defined setup? You said, what's the entry point? Scott, do you have a setup that you use to tell you whether this is worth buying? I tell you this right now. There is no way in this world I'd be even considering buying this, okay? Not in the slightest. And I look at this on a daily chart, okay? This is a... based on this is a pullback on an uptrend, right? But based on this chart, this is taken out. This is going down. This is a stage 4 going down. So when you look at those two things, okay, they're not telling you the same thing. So I wouldn't trade that if I was you're looking at that. Now, what time frame do you look at when you trade? Apple. Is it you're on a 4-hour? Oh, thank you. Okay. Okay. Still the same thing. It's still saying the same thing. This has taken out the 50 here. This is above the 20 and inside the Mobo here. I'm trading at the moment. Just curious about Apple. You're not trading. Right, okay. Let's have a look at this. Let's delete all of this. Okay. My shirt would be in the lost property department your shirt would be in the lost property department doing these trades. I know. Right? Porter, you were in that boat before you came and joined Sunday Insiders though. I bet you. So we had a trade that we got in here, down here, and rode this all the way. Okay. So is this an uptrend or a downtrend? This is a retracement. Okay, let's zoom out so you can see this. Look at the bigger picture. This is a retracement in an uptrend. This is a retracement, a big retracement, but a retracement in an uptrend. So none of these stocks you're pointing out are things that make me go, oh wow, this is setting up. It's not. It's not. And I know what you're missing. You've got no defined way to say, is this my setup? You have no defined philosophy of what you're doing, no defined setup, right? No defined setup criteria. This plus this plus this plus this plus this. Listen, you got to understand this key rule, and I did this in the presentation of 5 financial legacy powers yesterday that we're recording, right? There is 3 modes of trading. There is mechanical trading, there's subjective trading, and there's intuitive Intuitive trading. Right. Intuitive trading is where you have a feel for the markets and you just like in tune with it and you know what is likely to happen. Subjective is where you're looking at price patterns and you're saying, oh wow, look at this. This is probably going to do this and this, and you cup and tea handle and it's doing all these snapbacks and all these things like that, right? And then mechanical trading is hard rules. Price is 20 is above the 50. The 50 is above the 200. It's made a 21 day. We get in one tick above the high of the 21 day. That's hard rules. Right, here's the deal. You could never, ever, ever do intuitive trading until you've mastered subjective trading. Do you hear me? You cannot do intuitive trading until you've mastered subjective trading. You can never do subjective trading until you've mastered hard rules trading. Does that make sense? Here's the deal. HFTs are doing this and they are killing it, and they're probably making ridiculous sums of money in these markets. Most of the best traders in the world are who are sitting behind a desk trading. Okay, they're not trying to compete with these guys. Where do these guys trade? Intraday and daily time frames. They are dominating that. They are about 70, probably 80% now of the market right now, of the orders. The other people, they're not looking at intraday daily, they're looking at weekly. Right? The other human professionals are trading these time frames. They're in positions from 1 month to 3 months on their trades. Okay, these guys are doing something completely different down here. Okay, their trading is a fusion of mechanical and subjective. But to get there, you first have to master mechanical trading. Hard rules. What's your philosophy? What's your setup? What's your entry criteria? What's your stop? What's your break-even rules? What's your trade management rules? What's your profit-taking rules? What's your scaling in rules? Etc., etc., etc. Hard rules for all of those things. Does that make sense? So when you're asking me a question, that is what my brain is going to be asking you. Okay? To me, and this is not best summary approach. That's the best summary of approach I've ever heard. What do you mean? Can you speak, Adrian? Okay, tell me what you mean then. Okay. So while Adrian's doing that, I mean, how you categorize the 3 types of trading and how one should approach it. Okay, brilliant. Good. I'm glad you took that. So that's what you need to be thinking. So when you're asking me a question, that's what I'm doing in my mind. I'm going, well, what's his philosophy? What's he doing? I'm not doing a David Elliott, okay? I'm not doing a David Elliott. David Elliott gave you all the principles, but you had to understand how to trade to put it all together, right? You have to understand. David Elliott did some amazing stuff, but if you had to understand how to put the system together, and had to understand systems development and make a system out of it, and the reason why he didn't do it was because if he gave you a system and everyone's trading the exact same system, you're screwed. So what I do in my material, where I teach people financial legacy trading and investing, right? All right, financial legacy. This is financial legacy trading. What's financial legacy trading? How do you trade in a way that you take 100 trades to set your family up with indestructible generational wealth and income? That's what financial legacy trading is. Okay, I give people several ways to do each component, several ways to do all the things. So nobody's technically doing the exact same thing. It's pretty hard. We need a massive number of people for everybody doing the exact same thing. Okay? So, any other stocks? No? Cool. What if there's no more stocks? Then, okay. See how you sneak that win? Tell me what you want to know about it, and then I'll give you a better accent. Whoa, look at that. Well, I suppose the whole of that sector's dropped like that, hasn't it? Okay, what do you want to know? You're typing these things. Tell me what you want to know. A long-term buy point. Okay, listen to me. What, buy it? As in buy it to go long, Scott? Okay, I'm going to ask you a question. First question. Are you consistently profitable? If I looked at your account over the last year, would I see you had made money or lost money? You know. Okay. Do you know why I'm asking you this? I'm going to ask you this. Do you have a complete system? No, I didn't think so. So, you're looking for how long have you been trading? How long's a while? How long's a while? I don't know how long that is. To my son, if he's waiting for his dinner, 15 years. Okay. Tell me what you trade. What instrument? This is the tail. This is the head. This is the meat in the bottom. Right? You see this fish? I only want the meat in the bottom. But I'm not interested in the tail. It tastes disgusting. It's scaly. It's nasty. I don't want these teeth. Right? I don't want this beady eye. I'm not interested in that. Slightly piranha looking fish, isn't it? Right? I just want the meat in the middle. You see what you're doing, you're trading. Okay? Here's what you're trying to probably do. How do I buy the exact bottom and get out at the exact top? Let me tell you this right now. Nobody trades like that. What successful traders are doing with a trend that goes like this. This is your fish. Does this make sense? They're trying to just get the meat in the middle. Okay. Day traders are trying to just get a little bit like this. Swing traders are trying to get little bits of big chunk like this. Trend traders are trying to capture as much as the meat as possible in the middle. So when you say, when the market is dropping, we're looking for sell points. When the market is going up, we're looking to buy. We don't buy as the market is dropping, unless you're doing some form of dollar cost averaging of the indexes. So I'm looking at this and my brain is going, what? What are you talking about? Where do I buy this? The market's going down. Why would I consider even buying this? This is dropping. You should be looking to where do I short this? Not where do I buy this? Does that make sense? What do you trade? Do you use stocks or options, Scott? What are you doing? Stocks, or options? Or futures? Or Forex? You're a Forex man, aren't you? Oh, you're a Forex man. You can't be a Forex man because you once have said XOM. What are you trading? Stocks? What are you doing? Was stocks, then E-mini futures. Okay. And then where did you learn to trade stocks? Not consistent. Okay. That's because you have no system. You've got no full system. That's why. You've got no full system or methodology. You got no. Man, listen. Here's the test, everybody. I want you to answer this question. You ready? Scott, are you ready? I want everybody to type it. Everybody to type. Even you, Russell. Okay, you ready? Okay. I don't know how much money you've got in your trading account, but let's imagine you could take all the money out of your trading account and all of your savings. And you met somebody. Let's imagine you took all the money out of your trading account, all the money in your bank account, all your savings. And you meet this person who looks like you, acts like you, talks like you, behaves like you. Your mother wouldn't know it wasn't you, right? Your father, your sister, your brother, your wife, your children wouldn't know it was you. They were exactly like you. Would you give this person your money to trade? Would you expect to have more money or less money when you came back? particularly if you gave them your money to trade for a year. Would you, if you met this person, would you give this person your money? And would you expect to have more money, less money, or the same? Bruce, you say yes and more. We need to have a little chat. Okay. Yes, as long as he doesn't treat it. What about everybody else? If you met that person that looked like you, sounded like you, behaved like you, would you give them your whole trading account to trade for a whole year and you go away? You don't have anything to do with it. I want yes or no. Because here's the deal. That's what you're doing with your money. That is exactly what you're doing with your money right now. Okay? So you've got to be very careful. If you don't have a plan, if you don't have a full set of rules, if you don't have a money management strategy to help you to achieve your objectives, right? Does that make sense? And if your mind is not able to think in terms of probabilities, this is the hardest game in the world. But if you have those things and you can think like a professional trader, this is quite simple. Right. On that note, if there's no more questions, I'm going to run off. Is there a question before I go? Does it look like there is? Yes, I would. Thank you. Great point. Thank you. That's cool. Right. Stop. No, I'm not giving you any financial advice. I'm going to say this. You know, if I was in your situation, I would learn how to do this properly and not waste a single penny of mine on guessing and hoping the next trade works. Okay? I wouldn't waste a single dime of my money on trying to hope the next trade works out for me in my favour. Because it's luck and it's not a repeatable process. The market is a brilliant system of distributing wealth from those that have a system, those that have rules, those that have a plan, those that have a money management strategy, and all of those things are designed to achieve their objectives. And their mind is aligned to do it. The market is a means to take the money out of your account if you don't have those things and to give it to those that do. And if you make money in the short term, if you don't have those things in place, you'll give it to those that do. And with that said, this is Patrick Stockhausen saying, I will speak to you soon. I love you, I leave you, I see you. Bye!